Hello everyone, welcome to Market Recap with Starting Visit. So let's start with Nifty as usual. And before that, I want to show you something. Um, a trader has to backtest how the market reacted previously to wars or any situation, how the market reacted in bear, uh, fall or up move. So it is very much important. I used to do this. So I was just checking how the market reacted during correction last time. So since we are in the correction, we'll just have a quick glance and see how markets reacted previously. So as you can see, um, starting from here. So when the market topped in the September 2024, it did not give a clear sharp downfall. Rather, it gave the trend moved in lower lows and lower highs as usual. So the structure of trend is fractal, so it will always follow the trend. At some point, it will bounce lower lows, lower highs. Again, if you see there is a lower low, lower high, I'll remove the moving averages so that it will give you some clarity. So as you can see, the price has formed lower lows and lower highs and then gave a correction from the top here. It was a correction of almost 70 percentage. Luckily, we did not enter bear market just for the terms. And this was a correction in 2024 to 2025. This was like a 7 to 8 months correction and a 17 percentage down move, which was not a steep fall. And if we go to 2021 Russian war, just like how we see right now, the markets that time also the Russia-Ukraine war was at peak and the markets were strongly in downtrend. And this was a correction from the top to bottom. This was a correction of 18.4 percentage. And if you see again here, the market followed the trend with the lower lows and lower highs. As you can see, there is a clear structure. If you mark the structure in daily, it will be very clear. And this is how the market reacted. It did not fall uh, like a waterfall and give a steep correction. Because I'm mentioning it again and again because in COVID, what we saw was a one of a kind fall, and the market reacted from. So this, if I taking this as the swing from the top to bottom, it was a correction of 38 percentage. This was a very steep fall in a matter of month or two. We gave a steep fall, unlike a Russian war or 2024 correction, and the market started forming higher highs, higher lows, and then every low was getting protected, and we started an up move. Right now, the markets are in a different phase and it is giving correction gradually, rather unlike COVID. So if you go and check every time how the markets reacted, every time frame, how the markets behaved, what led to reversal, how it moved from there. It is very much important for a trader to understand and analyze and prepare for the next rally or next down move. So we can, if a trader is experienced enough, if he has backtested lots and lots of data going back years and years, studied it over time, and not just the date his backtesting has to work, not just work in the past, it has to work in the future also. Because when you create a strategy, it will be built on the past data, but when you work on the future data, which is important, that is where we make money in the future. So if Nifty is going to make an up move from here, for example, so I have to have some strategy to find out what is about to happen in the markets, if it is going up, where it is going up, how much it can go, and then fix the targets and make money out of it. Wherever the markets go, we have to make money. That is our ultimate agenda. Rather than anticipating something, we have to be prepared enough, make a strategy, backtest, and instead of just guessing game, we have to prepare everything. This is how I planned, executed everything. This is how I do things, and I'm sharing those things for out here. So Nifty, as you see, let's weekly time frame. Previously, I showed the correction, how it was, how it moved in the 2024. We saw three corrections, three in a simple time frame. If you want, I can study it in detail and share the charts in the channel. So as you can see, we saw three corrections. Now coming back to uh, weekly time frame and current scenario. So as you can see, price has closed below this strong candle and this strong candle too. We have closed below this low, so which makes it bearish here. Very strong closure with a gap here. We could call this as a runway gap or anything. And coming to what is about to happen in the next week. So as you see, this has clearly structure change of structure here. The price has formed a lower low in the daily time frame. Now the structure in daily is bearish, so we have to have a bearish tone and prepare for what the markets will do next. Now this if you see, this has acted as a strong support previously. This was a not breachable area. Again price has come here and we saw a bounce on the next day, 1.1 percentage one move, and then again it is sliding down. So what it can happen here, uh it's not like we know everything how the market is going to behave, how it will react. So the market is going to open after 2 days of rest. Now if there has to be a shorting opportunity, the market is, since market is downtrend, price rejected from 21 EMA and gave a fall. If you are holding the short, then your stop loss will be 24,620, somewhere above this candle in the this sharp sell off candle. If you are holding shorts, if you are adding shorts, then the market has to hold below 24,400 for an hour or two, and then it will start to slide towards 24,280 and leading all the way to 23,950. So this is where my next targets are. So those who are holding shorts, those who are in the markets already trading for the last actually trading for the last 1 week or 2 weeks, then you can continue to hold it. Then coming to up move, so price first has to break above. For creating any long positions here, it has to break above 24,700. That is very much important, and it has to break above this high, to last 2 days high, and has to sustain for some time. Then the price could move towards 25,000. And remember, 25,320 will be a strong resistance going forward here. So this is the downside and upside target. However the markets react, if the price is sideways, obviously you will have to wait and watch and not get into premium decay. Then coming to Bank Nifty weekly time frame. So as you see, so there has been a clear cut close below the low of this candle, so it has turned bearish. So we found the bearish pattern in the daily time frame and it has converted into weekly. So all these things you noted down, how you are behaving, how you are planning things in the time every time frame, and how you are taking the trades. This all these things matter in the market. And coming to daily, so this was the bearish candle I shared. And I want to stress something here. So this was a bearish candle. After this, the price was very strong. It tried to move up on the second day. It tried to move up almost. We are near the bearish engulfing high, and the next day it started to gradually fall. So if you see this, the high of 24 February is 61,435. Next day, it did not break above the previous day high and makes a high of 61,317. So next day, again, it is not breaking previous day high, 61,283, 284. So by looking at this daily candles, you simply say price is, there has been a, you just note it down. You'll have to do these things manually. Price has a bearish engulfing and it is not breaking above previous day's highs and making lower highs. And then we have a close. So this could give us 2 to 3 trades in a 1 week time frame. So this was a trade if you had carried positions once we had a clear cut closure below the low of bearish engulfing pattern. So a down move of you capture a down move of 1,000 points. Next day, again the market opens gap down and 1,000 points down move, and then there is a pullback, and then there is a 15, and then there is a strong sell off, 1,272 points. If we go to 15-minute time frame, so I was mentioning this price is not breaking highs. If you see, price is not breaking highs, and then again, so if you see, you just mark it down and do the work manually. It is not breaking highs. Then we have a clear cut closure in the 4 hour hourly time frame. So you wait for your trade, you wait for to come into your favor. This is the edge you have to follow. Once we have a 4 hour closure, then you add positions again when the market closes in the next 4 hour. So once we have a clear cut closure, you add positions. Next day the market opens and boom, you're in profit. So this is how you plan. You wait patiently and wait and strike at the right time. And if you see again, there is a one more gap down after price testing 21 EMA. So first time testing 21 EMA will give a shorting opportunity. This has happened, back tested. Again, there is a gap down 1,000 points. Then slowly it comes towards previous day's lows. If I mark this level, it has come to previous day's lows and 15 minute. This time it is reacting to 15 minute 50 EMA. So you plan everything in the daily time frame. Coming to weekly, how you execute, you note it down, and this is how it reacted. And then from 59,200 to 57,782, so almost a down move of 2.6 percentage. So this is how you plan. You get 4 to 5 trades just based on weekly time frame and observing for sorry, 4 to 5 days. So excuse me, you get 4 to 5 trades in just a week. So this is how you plan. And bank nifty is bearish. Next I see a down move towards, there will be no new entries right now because being a pullback trader we'll have to wait. The market could slide towards 57,100 and 56,420 in the coming days if this low breaks and holds for an hour or two. Whenever I mention when the market holds below an hour or two, see, if you see, this was the low of Wednesday, and once the market started to hold for an hour or two, slowly it was holding from 10:30 to 1:15 p.m. and then 58,000 to 300, 600 points. You get it in just 45 minutes. Just a minute. Thank you for waiting. So as you see, it gave a strong down move. I mentioned that monthly could be a big reaction could be coming in the bank nifty since it has not given a strong correction after the COVID. There is a pullback to 21 EMA and then it starts to move up. So again, there will be a test of 21 EMA. If the market holds the base here, then it will start to move up from here. If not, we could test 48,000 levels, almost 10,000 points down move from here. So in the monthly time frame, I have planned two targets, 21 EMA and 50 EMA. And coming to global markets, as you see, the market has been bearish and closed strongly below, strongly in the down on the downside in weekly time frame, be it Nasdaq futures or SPX, sorry, Nasdaq futures or anything, XPX or DJ, everything has closed strongly in the weekly time frame. So the market tends to remain bearish here. So this is my view on equities. And coming to few stocks, some are holding, and the one index which is holding right now is pharma and IT. Sorry, pharma and India defense. One thing here, I like the weekly closing. Once the market starts to move above, I'll place the trigger here. Sorry, I have cold, so unable to speak properly and coughing up. So this is the high. It has to break and hold above the high. Then we can see a good move because this level we can see price is not closing. It breaks, but it is not closing above this 23,140 somewhere around this level. Mark this as important. If you are going long when the market is giving a slight pullback, then try to pick pharma and for longs again. This has given a strong closing in the weekly time frame. The trend in Nifty in India defense is string bullish. It's not bearish at all. So the trend in the weekly daily time frame is still bullish in defense sector. So you can keep this sector for buying. And other than that, there has been a strong down move in all other sectors. So try to avoid them. They are breaking below previous days low, previous weekly lows, closing below weekly lows. So unless until we have a close above previous daily or weekly highs consecutively for 2 to 3 days, we will not plan longs. That would be my suggestion. And metals are looking good, but as I said, price has to break and close above weekly highs for market to sustain. So these are the important levels, or at least first it has to break about 12,200 and close, and then move towards 12,360 and give a close. A closure is very much important to plan longs. If it is not closing above it, there is no long in it. And you have to be very clear about what you should do in the markets and what you should not do. So this is my view on equities. Right now, I'm not looking at buying anything for now. So slowly I'll get back into the markets in the coming week. And coming to commodities. So gold, in the daily time frame, I have placed a trigger above 5 to 10. So as of now, in the 4 hour time frame, it is somewhat kind of in a after a strong sell off on Tuesday, it is somewhat in a sideways market. So if it goes above this level, then we can start looking for longs again. And then for silver, the same view holds here. So since it reacted from the 96.5 levels, the market has been sideways for the last 3 sessions in the daily time frame. Again, it has to break above this level and go long. If it breaks below previous days close, both gold and silver, I will go short. And crude, as I said, the market reacts before news. And whatever happens, the market, everything is pre-planned except for natural disasters. Markets already know what is about to happen. So in the weekly time frame, if I look at crude and NYMA structure, so it is heading towards next 100 levels. That is where my view holds. So this is COVID fall. The, there was a drop to zero in the COVID. Right now, a breakout of triangle in the weekly time frame, and the prices are very strong. So as you see, there has been a 35 percentage move in the crude oil in the last 1 week. So we were bullish because the candles were showing strong strength here. So even before the war broke out, we were bullish. We were sharing the triangle and calling for buy. Right now, it is heading towards Russian wars high towards 100 levels, and then we might see 122. And natural gas daily time frame. Let me just come to, give me a minute. So as you see, it is at previous support zone here. Right now, it is, I said it has to make higher highs, higher lows in the hourly time frame. Only then it will be good for longs. So it broke above. It broke above previous high, give a close, and then gave a pullback. So without breaking this low, it formed a bottom here and gave a strong move of 8% on Friday. So this is how structures change. Lower high changing into higher low and higher highs here. So we could see the markets opening a gap up. That's what I feel right now. Let's see. And looking at other metals, I'm not strongly bullish in other metals, but gold and silver are holding for now. Let's see how these will move in the market. So as you can see, platinum is also sideways for the last 3 sessions. And coming to dollar had been in a strong move for the last 2 to 3 weeks, and we have been closely monitoring dollar. So if the prices break above 99.4 and the weekly high of 99.7, we could move towards 100.4 from here. That is my view for dollar. If it's break below 98.4, then we might start to slide down, making the dollar weak. And the USD INR, so after hitting new lifetime high, it has given a pullback. There is no change in structure. It is bullish and continues to remain, the rupee continues to remain weak. So this is my plan for the next week. I'll share trades whenever it comes. So have a profitable week. Thank you.